Hello, this is the trade site U.S. stocks and futures market preview for Wednesday the 12th, Thursday the 12th of March and Friday the 13th of March 2020. So Friday the 13th we have. Let's keep a couple things in mind. So Wednesday's the 12th, and then we roll to the June futures contract. And this is the quarterly contract roll between Thursday and Friday. Usually you would say, well, that's going to be a boring day. Problem is, with everything that's going on in the market right now, I doubt there's any boring days. There's also a reason that I'm starting here with the ES front month futures contract chart. That is the monthly chart, right? This is the monthly chart. And why? Because we have been telling you how this is going to play out. Now, I know the virus is accelerating things. It's an excuse. It's not an excuse. It's accelerating the problem. But we had a bubble already, and the virus, the way to look at it is this. If you go back to 2008, 2007 really, if you had a bubble in the market, it wasn't the real estate market because that was part of the bubble. It was the oil market that popped it. What does that mean? Let's look real quick at crude oil going back like a long ways, right? What popped it was this move. You see that move back in 2007 where we got over 80 bucks for the first time in history. We held it. We even went to 140. That was too expensive for oil. The economy could not handle it. The demand was so high and the economy could not. And so what happened was the real estate market was already doing some extreme things. Interest rates were high enough, and you had the credit default swap market. But it was actually, people don't say this enough, it was oil that popped the market. And you see how short that blip was, right? We went up and back in 6 months or whatever. But we did hit 150, 140 plus, and that's just really expensive. That was like $5 at the pump gas plus, and that's not in California standards. That's like middle of the country standards. And so that's what popped the economy. And once it did, and everybody stopped saying, I can't afford to drive, right? Then all the other parts of the economy got exposed. And that's what brought us in. So sometimes people go, oh, it was one thing or it was the other thing. It was a housing bubble because they were appraising houses too high. It was a stock market bubble because we've been up too much. And it was then the oil price that popped the bubble because the economy couldn't withstand it. Right? These are totally different things. This time around, it's a different story. Okay. This time around, it is a stock market bubble. This is how we get, so since 2009, starting with Obama's election, the S&P was sitting at 750, right? And it has now run to 3,300 basically as a high over the course of 11 years. A lot of people don't understand that, right? There's people who go, oh, it's the Trump economy. It's not the Trump economy. It's the Obama economy, right? This is where we were. We've been in the same boat. We did pass some tax cuts that accelerated the economy when you should be instead paying off deficits, which we're not doing. So that leaves us with a deficit bubble. That's a problem. So we have, again, just like in 2007, 2008, left ourselves in a situation where there could be a problem if something goes at the problem. This time, it's not oil prices, which were stable, 40, 50, 60 bucks a barrel. It is the virus. And so the virus has popped the bubble. But we have the 13 cell signal on a monthly chart, and the virus popped the bubble. And I keep saying to people, the red line is the target. That red line is just under 2,000. It's around 1987. Ironic number. 1987, the last crash in the market. That's where the red line is. That is the target of this 13 cell signal on the biggest time frame possible, the monthly chart. So, we made a lot of money the last few years and whatever, and we make money on certain days here in the bubble. But you have to remember, our job at TradeSite, what we do, what we train people to do, what we teach people to do, what we hand people is to make sure that nobody's taking risk where it doesn't make sense. So there could be days where the market's gapping down or gapping up and then going the other way or going the same way. It doesn't, if there's no setups under the way we approach the market at TradeSite, we might not do much at all. We've had some huge days in the last couple of weeks on the downside here. We've also had some days where we didn't do anything. But here's the difference. We made money all the way up, and we made some great money on certain days all the way down. And we had a VXX call situation that made us 12 times our money from December, January, really, until the market started to fall apart here. This is what we do. But you can't sit down every day and go, well, look, the market fell apart 300 points on the S&P. Where do I make money? So, for example, tomorrow morning, right now, based on the fact that now the NBA has canceled their season, the NCAA is saying no fans, all these other things, the S&P futures, the ES, are showing a down negative 120 open. Nasdaq showing down another 350. Well, that's not tradable for us. We're going to gap down in the morning. Maybe we won't. This is 12 hours from now or 10 hours from now. Maybe we won't. Maybe we'll reverse that. Maybe something will happen overnight that will change the math on that. So we don't trade stocks and everything overnight and out of the market. So our focus is, once the market opens, are there setups that we know have a high percentage chance of making us money or not? And if there aren't, then we won't take them. And if there are, then we will. So we had, Wednesday we really didn't do too much. Monday, a couple things. But Tuesday we had some great setups and they worked. Even though the irony is they worked on the long side before the market fell apart. We made a decent amount of money on the long side on Tuesday. So we're just picky about our setups, and this is how it works, because our job is to try to make you money on a weekly, monthly, and annual basis. I don't care what happens on any given day. And if the market's going to gap 300 points in the day on the Nasdaq or whatever, it is what it is. Like, that doesn't address how we get into the market, right? And you have to be ready to stand aside for some of these crazy, crazy, crazy gaps. And the money is on the part of good setups. It's not on the part of the market being crazy. And just remember that the signal here alone, ignoring the story of the virus, which I do believe is accelerating some of this, and I think there's an issue here, but the market counting off these candles over the last 3 years did not anticipate the virus, right? So the market was already going to do this to some extent. This may be accelerating it, but the target is the red line, which is 1987. So be ready for that, and we will see what we get through. Let's go through the crude numbers. Crude oil down $1.61 to 31.37. So it's kind of been down here. Gold down about $5. Well, it's down $5 now. It's down a little bit yesterday. We're still off the highs a little bit. S&P cash index loses 140. This is the cash index. So you've given up. And by the way, just to be clear, you've given up everything now all the way back to last. You've given up a year's plus worth of gains on the market. And if we look at this, by the way, the one thing I do want to point out is, I just put it in simple mathematics, and I'll put it in the easiest terms I can. If we get back to the red line at 1987, what you've given up is the market run of the Trump presidency. That's reality. By the way, at TradeSight, we only speak in facts. We don't speak in ignoring science and math and all that stuff. So this is what this actually means. This takes us back to those numbers. So if we actually get to the target of the sell signal, which is 1987, you've given up the entire last 3.5 years. So just be aware of that. Nasdaq 100 down. We don't need the 30. Well, here's the Nasdaq 100, which also got a 13. This is amazing too, by the way. The Nasdaq 100 got a 13 sell signal on the monthly in January. So both the S&P and the Nasdaq had it, which is kind of unusual. They don't usually get it at the same time. And by the way, on the Nasdaq side, where's the touch point? We almost got to 10,000. The touch point going back, the red line, 4,100. So just be aware of that. And if everybody goes, oh, that can't possibly happen. Yeah, let's keep shutting down sporting events, sporting leagues, telling people not to go out in public. Let's become Italy and tell me that doesn't bring the economy to a grinding halt, no matter whom can work from home. Obviously, we as traders can work from home, and tell me that can't happen, right? And that's the thing. Wake up. The SOX down 93.96, new closing low on the SOX. Biotech's down 172.83. So whatever, mid for the last year, down 86 on the Russell 2000. This poor thing. All the small cap stocks are destroyed. Why does that make sense? I mean, because when's the last time you had 1240 on the small cap stocks? Oh, you have to go all the way back to, you didn't even touch it there, you didn't touch it there, blah, 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 blah. And so I just want to be really clear. Before I get to 1240 on the chart, I have to keep sliding back and being bored and blah, blah. And here it is. When is that? November 2016. The election, the last election. So that's where we're already on the Russell 2000. It's given back because of this drop, all of the gains and more. And by the way, these are the small cap stocks, right? So this is the future. That's what we've given up. The VIX up $6.60 to 53.90. Not the highest close yet in this whole thing, which is interesting because it was the lowest close on the market. Trading up closes at 1.64, puts the 10-day at 1.26. Nasdaq volume was 4.3 billion shares. It's been hanging up here, so that's good. Advanced decline ratio on the Nasdaq was negative 2507, the second worst day of the last 12 months. Advanced decline ratio in New York negative 1270. Google down 64.27, and that obviously gives back a lot. Apple down 991. Now, keep in mind, we always point out, this is the thing. Our job, because we're a market analysis company, right? Our job is always to point out what's going on in the FANG stocks, the major stocks. And there's 10 stocks that basically move the market for the most part. It's not like there's the Nasdaq 100, then all 100 stocks matter equally. So we usually point those out. But those are the ones that run up, and those are also the ones that are coming back. Netflix down 14.21, which is interesting. It has held up better, and I will keep making this claim. If everybody is, I keep telling my subscribers this, if everybody's told to stay home for a month, Netflix is the only pure streaming stock that you have. It's the only stock where everything about this is about, watching their shows and sitting there and watching everything that they have, right? You can look at something like a Disney and you can, there's Disney Plus, there's Hulu. The problem is that it also includes Disneyland parks. So if you're going to buy the stock, well, if the parks are closed, that's going to affect the company, right? So and Amazon has Amazon Prime, but that also implies that people keep buying things because they're shipping things or whatever, right? So this one is the pure streaming company. It has held up better so far, as I think it should. And the funny thing is, technically speaking, because we believe in technicals here, look at that red line. Amazon down 70.96. This thing's held up not so well at all. Tesla down 11.10. This one did have the 13. By the way, the 13 sell signal was the high candle. And the target of that is the red line, which is 1435 or so. And it's still heading towards that. So just be clear, like the signal continues to work. Facebook down 7.95. Goldman Sachs down 12.46. And basically a new closing low, but not a new closing trade from the last couple of days. But if it breaks those lows, look out there. TLT, the 20-year bond ETF, was actually down $5.98. So the spike all the way up to 180 and then back in 3 days, and it is what it is. But the Dow lost 1464, and this is a new closing low on the Dow. I will say, who cares about the Dow? It's 1,000. It's a 30-point stock index, and so mostly people don't care and they don't follow it, and it is what it is. So that is the current look at the market. Again, our job is not to look and tell you, tomorrow's the bottom, right? Buy everything tomorrow. Today's the bottom. A week from now. That's not what we do. If the market gaps up a little tomorrow and starts to sell off, I'm sure we'll find some shorts. If the market gaps down and starts to climb, I'm sure we'll find some longs. If the market gaps down huge and keeps heading lower, I don't think it's going to be much of a trading day. This is how we work at TradeSight. Our job is to protect you, make you money when it's obvious, and keep you out of harm's way when it's not. We are an institutional level platform, and that's what we do. So I don't want anybody to get hurt. I may not make any specific calls. We could be opening down max tomorrow again and have the everything kick in terms of circuit breakers and whatever, and then we'll see where we get. We may stop, we may not stop, and we'll go from there. It still might be, like I said, that 1987 level on the ES, which is still another 650 points from where we are right now, being down 100 for tomorrow open. That could still be target, and that could be low. But we will see what happens. Charts as usual, brought to you by eSignal. If you've not yet taken the trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading Thursday and Friday. And by the way, typically, I just want to be clear, typically we don't do a market preview for Friday. We do if it feels like there's going to be a big deal. We are in the middle of this mess, rolling the futures contracts, and that could be a big deal. So we will see what that means. Maybe it means something happens tomorrow. Typically, it means Friday's dead, but I don't think Friday's going to be dead this week. So maybe we need to do a preview tomorrow night. Have a great night. Sorry about the dog barking.